This is the Coins, Cashflow, and Conversation podcast. I am your host, Dakota Grady, sponsored by Upstate Essential Solutions. If you need help with accounting or taxes or personal finances, contact me today at dakotagrady.com. Again, if you need help with your personal finances and business finances, I am your guy. dakotagrady.com is the website. Hey y'all, I want to continue the conversation about the tax law changes for 2024. So we're going to start with the business items. So business meals were back up to 50% because in 2022, you get deduct 100% of your meals. Well, going forward from last year and forward, business meals are deducted by only 50%. And if you had deferred Social Security taxes for your business, they're due. You may have gotten a notice from the IRS as well. The standard mileage rate is 65.5%, and then it's 22% for medical and 14% for charity. Bonus depreciation, which is depreciation that you can take for the first year of putting an asset into service, such as a vehicle or machinery, it phases out. So going forward in 2023, depreciation for bonus depreciation is 80%. And for 2022, it was 100% depreciation. We talked about the commercial clean vehicle credit as well. And then we have the gig economy tax center, which IRS wants to help the gig economy, self-employment people, learn about tax laws so they can be in compliance at irs.gov/gig, GIG. And we're talking about the Corporate Transparency Act, or the CTA. It's a government federal law that requires most domestic business entities to file reports with the Financial Crimes Enforcement Network, or FinCEN, that identify their beneficial owners. The CTA is designed to help prevent and combat money laundering, tourist financing, and other financial crimes. That's right, y'all. So, in a nutshell, how this is going to work is the IRS wants to basically know who owns a business. It's called beneficial information owner, right? The BIO. So they want to keep a tab on when someone creates a business. For example, if you create a business this year, you have 90 days to report who owns the business to FinCEN, because they want to combat money laundering, any terrorist financing, and other financial crimes that may be happening through a business. And if you have a business already established before this year, 2024, you have until 2025 to actually report who owns that business. I know people may be saying, well, I want to create a business and I want to be anonymous. No. IRS wants to know who owns the business, who owns that business, so they can keep a tab on any kind of activity that's illegal, so they can take action and not be slow to action. So it's going to start on 1/1, January 1st, 2024, and it applies to most domestic businesses, and it needs to be reported to beneficial officers. That's right, owners. LLCs, that means limited liability companies, corporations, partnerships, owners that own 25% of the business. Right. So I want to stress this part here because make sure that you are doing this. I haven't seen any fines yet on this, but I'm sure if you don't report, there may be some sanctions for people who aren't reporting the beneficial information to the IRS, FinCEN, basically. So make sure this information is followed. You have a business or want to start a business, make sure you register with FinCEN so they'll make sure that you're in compliance. You're not money laundering, you're not doing anything illegal through your business. Be legit, y'all. Also, inflation adjustments, standard deduction increase, which it does every year. So the different filing statuses, there's single, head of household, married, filing joint, married, filing single, qualified widow, right? Those are the filing statuses. For each one of those, the standard deduction has increased. So you can go online, find out more about those, but I'm going to give you a couple of them now. If you're single, your standard deduction will be $13,850. If you're married, filing joint, and you are qualified widow, your standard deduction is $27,700. But go online to the irs.gov to find out what your filing status is and how much your standard deduction will be as well. Tax rates for 2023 include 10%, 12%, 22%, 24%, 32%, 35%, and 37% for taxes. So depending on your income level, that determines how much you pay in taxes based on the percentage of your tax, the tax bracket basically. So if you make a lot of income, you pay more taxes. If you make low income, you pay less taxes. That simple. The personal exemption remains at 0 for right now. That's right, so there's no personal exemption anymore. And there's a limitation of the itemized deductions continue to be suspended. So for example, you were able to deduct like things you pay for as an employee for your employee. You could be able to put things in taxes and say, I want to deduct that. That's no longer part of the itemized deduction anymore. Or say you pay your tax preparer for services for filing taxes. That's no longer a deduction you can take on your itemized deduction for your taxes. And then lifetime learning credit, which is for education, the modified adjusted gross income used to determine deduction is not adjusted for inflation. It phases out if you make basically $80,000 if you're single, and if you're married filing joint, it's $160,000. That was the number for 2022. So another change was for the foreign earned income exclusion. Basically, you can exclude some income if you work in another country overseas. You can exclude up to $120,000, right, for your income. Another one is the annual gift exclusion. You can exclude up to $17,000 for giving gifts. So you want to give your children or a friend or someone money without being taxed on that money or paying tax on that, give him or her $17,000 without paying tax on it. That's right, y'all. And then the maximum adoption credit has increased to $15,950 from $14,890. So it's an increase for those who want to claim the adoption credit for adoption. So the additional child tax credit for 2023 is now $1,600, and that's per child who is under the age of 17. Yes, so it went from $1,500 to $1,600 per child. Talking about reporting income, the issue the IRS is having is taxpayers are underreporting income. So the way to combat that is having forms like the 1099K or the 1099-DA, the digital asset, which we talked about in the last segment. Basically reporting income that people have earned. And if you use a payment processor or credit card, debit cards, and now the IRS is going to require that those vendors such as MasterCard, PayPal, Square, those companies are going to have to report on the 1099K how much someone has earned. Well, in 2022, it's basically saying $600. If you made $600 or more in aggregate payments during the year, the dismiss rule has been eliminated. So now you're basically saying you got to report anything that you have earned that's $600 or more. It's going to be reported on 1099K, in other words. And let's see here. Yeah, so basically, I mean, if the taxpayer can't, so basically, if you can't get a corrected 1099K, you basically have to ask the tax preparer to adjust it on tax return for you. Let you know what to do when it comes to adjusting it. If you get the incorrect 1099K, they can make an adjustment on the return so it'll show that the corrected amount. But again, you are getting this 1099K from a payment processor, reporting all your entries that you received through your business, and they're going to report that to you so that you can report that amount that's $600 or more to the IRS when you file your taxes. That's simple. And now we have the ability, IRS has the ability to allow taxpayers to file a 1040X, which is an immediate return. Now, direct deposit is available. Prior to the change, direct deposit wasn't available for an immediate return. You have to basically get your return via a check in the mail, which can take forever. But now, the IRS is allowing people to have direct deposit. But if you paper file your return, and the minute return that is, you get a paper check. So it's better to e-file your return and the minute return opposed to paper filing. But if you file it, a minute return, more than 3 times, the 4th time you amend it, you have to actually paper file it. So make sure you don't have to amend it that many times in order to get a refund. The Secure 2.0 highlights, which basically impacts retirement, right? Retirement is something that the IRS has emphasis on and wants to help taxpayers save more for, because people aren't saving for retirement. So the IRS wants to give people a leg up and hand up, I should say, when it comes to retirement. So some of the changes include, it has an increased required minimum distribution age of 73, which basically saying if you have retirement savings, IRS wants you to take money out of your retirement, not just hoard money. Basically, they want you to take money out, require minimum distribution. So now they're saying you can wait till later to take money out of your account. You can wait till age 73 to actually start withdrawing. And now there's an IRA limit, an individual retirement account limit of, it was in 2023, $6,500. In 2024, it is now $7,000. So it was $6,500, but now it's increased for 2024. It is now $7,000. That means you can contribute $7,000 to your IRA for retirement. And if you're 50 years old or older, you can have catch-up of $1,000. So you can potentially put in to the IRA $8,000 if you're 50 years or older. So that means you can contribute up to $30,000. Actually, $30,500 for 2024. That's right, y'all. And then for employer plans such as Simple IRA and the Simple 401k, you can contribute up to, for 2024, $19,500. That's right, y'all. So you can do, if you are doing a catch-up, if you're 50 years or older, for Simple, you can do $3,500 plus $16,000, which is totaling $19,500 for you if you're in that age group and you need to contribute to your retirement and catch up with it. And there's also a self-certified hardship where you can get $1,000 more if you're in a disaster area as well. So there's also an auto enrollment required with an option to opt out for last year, 2023, and that is a minimum of 3% with a maximum of 10%. So basically you can have a minimum of 3% of your income automatically taken out of your income, your wages, and deposited into whatever account you have set up with the employer. You can do 3% or 10% max. It's up to you, but people aren't saving, so the IRS wants to give people an option to start saving for retirement. This is very, very vital, y'all. So again, the Secure Act was implemented because the IRS wanted to make retirement savings more accessible to people, and employer plans will automatically opt employees into retirement savings starting in 2025. So again, it's to help people to start thinking about retirement and put it on autopilot as well. So there's also a startup credit for employees of less than 50 employees, or employers with less than 50 employees, to start setting up a retirement plan as well. So you can get credit for that. You can also get a student loan matching. Employers can match the contributions for employers' student loan payments. That's dope. And you can also get incentives to your, well, basically, employers can incentivize employees to start saving for retirement. That's right. And then for the 25-29 plans, which are basically educational savings accounts, you can now roll over that money to a Roth IRA or IRA. But it must be, you gotta roll over, and you can roll up to $35,000 for that particular account into a Roth IRA for the beneficiary. And then an employer can set up an emergency savings account on behalf of an employee up to $2,500. So this is a major change for retirement that the government wants to do to help the taxpayer become more ready for retirement. So again, starting in 2024, there's this roll certain long-term unused, basically roll over certain long-term unused 529 plan funds into an IRA for a beneficiary. And again, the limit is $35,000, and there's a 5-year look back for 529 plans, and it has a life of 15 years. And you must be, the IRA must be paid to a Roth IRA or the beneficiary of the 529 plan. And rollover amounts most likely will not be subject to income limits. And again, student loan payment matching takes effect this year as well. And there are more changes to the Secure 2.0. If you want to get more information about it, go online to the irs.gov to find out more about Secure 2.0 changes for retirement. I want to talk about some changes on the court cases. One specifically, actually 4 we talked about during the training was the Augusta rule. There was a case about that in 2023. The realized income, there was an issue with that, or a court case about that. Hobby expenses and shareholder loans. I don't want to talk about the first one, which is the Augusta rule. And basically it's saying that you can live, and actually you can have a home and rent the home out to your business. And when you get the income from your business, you don't have to report to the IRS. But the caveats are, you must rent your home to yourself less than 15 days in a year. So if you want to rent your home out to yourself, your business, once a month, make sure that you charge a comparable rate of what, so you mean there are 5 to 10 people in the meeting, right? Well, call a local hotel, ask how much the fee would be to rent a room, a conference room at their location at the hotel for 5 to 10 people. Whatever rate they tell you they charge yourself, that is the business, that same rate, because it's what people are charging in the area, more likely, right? If you were to call 5 hotels, I guarantee you they'll have similar prices for each hotel room in terms of renting it for a conference or meeting. So charge whatever is the going rate in your area for the meeting room. Document who attended the meeting, what was discussed, and just document that. Document, make sure that the meeting actually happened. And also the time it started and the time the meeting ended. Keep it on file, because if you get audited, you want to make sure you have the information on hand in case an auditor asks you for the documentation, to make sure that they substantiate the meeting occurred and don't overcharge. Because this particular case was Sinopoly versus the commission, the IRS, it is, the people were overcharging for reusing the space. They're renting out their homes the owners, I think it was like the S corporation, the shareholders were renting out their homes and charging an exorbitant amount for rent. I'm like, no, you can't do that. Make sure you charge what the going rate is in your area. So the IRS basically said you can only charge this amount of money because you can't substantiate the meetings that took place over a period of time, and you're charging too much for the space. To basically charge your business too much for renting out your home. So again, this is a legit tax law. Make sure you document the meetings that are happening, beginning and end times, who attended, what was discussed during the meeting, was the business, and document how much you paid for that particular space. Create an invoice for your business and say we're going to, and also create an agreement and say we're going to pay this amount of money for the meeting space, the home that is. Document it, keep it in the file. That's right, y'all. And just be legit, y'all. Be legit with this stuff. It's there to help you, not for you to take advantage of it. The wrong way, that is. Other things we talked about were refundable credits, such as the Earned Income Tax Credit, the EITC. Well, I learned that basically, the Earned Income Tax Credit, or the EIC, is for taxpayers who have low income. It's basically to give them a boost of income when they file taxes because they don't make a lot of money. So the IRS wants to reward them for working. Well, research done by, I think it was the University of Chicago, Stanford University, and another university, I forget what it was. But anyway, they did research and basically found it as racism in the audit process for the EIC. What did they find? They found that blacks are audited like 3 to 5 times more than the white person who is applying or who is taking the Earned Income Tax Credit, EIC. So that means if you're black, you're more likely, if you get the EIC when you file your taxes, you're more likely to get audited than your counterpart. One of my clients this past year, she got audited by the IRS. They sent me a letter and it said, saying basically the information to substantiate your income for your return. I did that. After I did that, I saw this research about this right here, about the racism. I'm like, ooh, my client got audited because she's black? Oh my goodness. And it also said that if you're a black male and you're claiming the credit, you're even more likely to get audited by the IRS for the credit. So they were saying in the research that this discourages people who are qualified to get the credit not to apply for the credit because of the likelihood of getting audited. That's not fair. So I hope the IRS sees this and say, do the right thing and stop pinpointing people because of race. Focus on people who are underreporting their income opposed to people who are hardworking people just trying to make it in life. That's my 2 cents on that. All right, moving forward. Talk about the e-file mandate. The IRS is giving taxpayers the opportunity to file taxes for free. And it's called the e-file mandate. And basically, opposed to someone coming to me, a preparer, to do it for them to get earned income, the IRS giving taxpayers the opportunity to go file their own taxes for free. I don't know how that's gonna work out, but some people do their own taxes online anyway, so it's not like it'll just be a free way to do it. Now, I recommend hiring a pro who does it every day so they can keep up with tax law changes like me, going through CPE, so that I can be knowledgeable for my clients so they can know tax law, so I can know tax law changes, so I can help my clients get all the credits that they can get and deductions as well. Also, if you're a business, like an S corporation, for example, and you file your taxes late, the IRS offers a first-time abatement, which basically is they're going to waive your penalties and interest for filing late. And it's very easy to do. You can waive penalties for late filing returns. So you can go online and irs.gov is a resource for that to get a penalty abatement. It's a form you have to fill out and send it to the IRS. So those were pretty much the tax law changes for this year. I hope that they were beneficial to you. And I know it's a lot. I probably went too fast on some of them, but if you need more information, contact me today at dakotagrady.com. I want to give you all this information about tax law changes because it's important for me to educate my clients on the tax law changes. Again, I think the biggest one to take away from me is that new requirement by FinCEN requiring business owners to report who owns the business. I mean, I understand that because they want to keep us safe and keep people fair and encourage people to do the right thing, stay compliant within the tax law. And also changes with the security or with the retirement changes. The IRS wants to encourage people to save for retirement because people aren't really saving for retirement, which is a big deal. I want to encourage you to start saving for retirement as well. And also just the tax law, the credits for vehicles, new and used, and also the credit for your home. Take advantage of these credits, and I hope these tax law changes were beneficial to you. And I want to encourage you to like, share, comment. I want to know your feedback on the podcast. What you like, don't like, what you want to hear more of, who you want me to invite as a guest. Maybe you want to be a guest, contact me today at dakotagrady.com. This is the Coins, Cashflow, and Conversations podcast. I am your host, Dakota Grady. If you need help with your accounting and taxes for your business, mid-spot owners, nurse practitioner entrepreneurs, and esthetician entrepreneurs. If you need help with bookkeeping and taxes for your business, contact me today at dakotagrady.com. And if you're struggling financially, you live in check to check, tired of worrying, being stressed, you want to be able to live life, give, save, invest, travel, spend time with your grandkids, you want to start a business, do the things you really want to do, contact me today at dakotagrady.com. This episode of the Coins, Cashflow, and Conversation podcast is sponsored by Upstate Essential Solutions. The website again is dakotagrady.com.